or that quiz. All right, let me share the screen. Again, it's not going to look like this on your exam. Your final exam is going to be again more detailed questions. So this is just more so you can become familiar with the format. Another review of what we went over before. Okay, just a bit slow. Oh, the first question. A lot of information, right? Now, remember how I said you can copy and paste your computations in here? Same thing with the final exam. I guess one way of doing this, I can just, you know, most likely I'm going to ask you to do it for both sides. So one and two, I can just copy and paste into a spreadsheet, right? So let me highlight what I need and then just copy and paste into a spreadsheet. Let me show you the spreadsheet that I have. Oh, that's too small. So now I'm back on the spreadsheet. So again, I highlight it, or you can just get the information as you see fit, and then just copy the information individually to your spreadsheet. Either way works. Now, there's two parts of the equation here, right? There's M forte, right? Can you guys see okay with? Let me make it a bit bigger. Hold on. I think that's better, right? Okay, that's a bit better. So we got M forte, and then we have L Briggs, right? What is the equation? Again, this is a like-kind exchange. Well, you know what? I should have updated this one. This should have been property, right? Because you can't do exchange on equipment. Nonetheless, the concept is still the same. Remember, the only thing that can be as part of the Tax Cuts and Jobs Act, you can only do like-kind exchanges on equipment. So that's what I mean, on real estate, not a personal T. That's what I was focusing on. So assume that it's realty. That was my bad. Um, or I don't know if I changed it on your end. Nonetheless, let's assume that was it realty for realty on your end. I don't know if I updated the worksheet on your end.
It was equipment.
Okay, so again, never mind that. Just assume that it was realty for realty. I should have made that change from my end. Because if it was equipment, then it's all recognized. It's you don't defer the gain, but that's not what I was testing you on. But there's an equation. The equation on top for amount realized is going to be fair market value of property received, right? Plus what? Boot received, right? Wait, hold on. I don't like that. So it's a plus boot received, right? Minus what? Boot paid, right? And that equals, I'm going to abbreviate amount realized. I'm just going to abbreviate. And then minus adjusted, I'll just abbreviate adjusted basis. That'll work. And that equals real GL, right? Now that is the basic equation. And, right now we're going to put everything into play. Um, and then we'll figure out if any gain is recognized. All right, so the first information, M forte. Actually, let's do the basis as well. So the top number is the gain or loss realized, and then we have basis of new property, right? So we start out with basis of owed, right? Something like that, right? Add gain recognize. If there's any gain recognized, add. Actually, let me do it this way. Um, plus gain recognize plus cash paid, right? Minus cash received equals basis of new. That's it. So that's the equation. Um, so now we got the equations. Fair market value of property received. Forte is getting Briggs property. The fair market value for Briggs property is how much? Briggs property had a basis of 70,600. Briggs property is valued at 80,500, right? You guys get that? But what else is happening here? Isn't there like a cash transaction involved? Briggs, what else is happening here? I should have, actually, let me wrap, wrap it real quick. Uh,
Miss Forte receives $20,000 boot.
Forte received boot.
Yeah,
Okay,
20,000.
okay, so that's the part. I don't know why I didn't copy. Is that right? Total amount realized for Forte is 100,500. Is that right?
Yes.
Yep.
Okay, the adjusted basis, the property that Forte is giving up is minus 70,600, right? Right. So
Yes.
realized gain is 29,900. Okay.
100. Yeah.
Yeah, that sounds about right. So what is the recognized gain? Recognized gain is less
20,000.
of boot received or gain realized. In this case, boot is less, and so it's $20,000, right? Everybody okay with the $20,000? Any questions on that? The boot is less, so $20,000 is recognized, right? I'll worry about the formatting later, but in terms of the basis of the old property, we start out with 70,600, right? Add gain recognized 29,900. There's no cash paid, but there is food received, right?
20,000. Yeah.
So it goes back to, it should be back to the beginning number, right? Or, well, actually, no, it should be, I did something wrong here. It's 20,000, right? 70,600, you're back to where you started, right? Now let's take a look, put some formatting. Please put your microphone on mute unless you're talking. There's some background noise. Okay, not anymore. Okay, so let's do the formatting. So on top, let's put a okay. So then, okay. So then I can just copy and paste this equation to here, right? And the numbers are going to be different, of course. Um, Basis of new property, right? So over here we have, well, Briggs is getting Forte's property, right? How much? That's worth 100,500, right? But he's the one that's paying the boot, right? So there's no boot received. There's boot paid. So there's a typo there. Be careful when you're doing your computations. Make sure you put the right number of decimal places. Sometimes it won't work. The basis of the property that Forte's property is 70,900, right? So realized gain is 9,600. Do we recognize that? What do you guys think?
No,
Why not?
because he didn't receive the boot.
Yeah. No gain is recognized because uh, Briggs did not receive food. Very good. Does somebody have a question? I think somebody had a question. Uh, no? Okay. All right. So going back to this equation, there's no gain recognized, right? But there is cash paid. you gotta sort of play around with the numbers here. Well, not with the numbers, with the equation. So think about, you know how last week I showed you how to do it with journal entries too. Either way works, as long as the answers are correct. So the first one asking for the top portion, right? I don't need all these empty spaces. I'm gonna delete that. And I guess I don't need this anymore, right? I can delete that as well. Of course, when you're taking your exam, don't spend too much time on this, formatting. Just as long as you get the answers correct, focus more on that. So now I'm going to copy. You see what I did? I highlighted, I copied, and now I'm going to paste it to my answer, right? Let's see. Yeah, it's a bit slow from my end. Again, I want you guys to do your own Excel spreadsheets. Do not use the ones that we've created in class. The ones we've used in class. Create yours from scratch. Again, when you're studying for the exam, you can use the spreadsheets, but when you're actually doing it, I want you to create your own. All right, so for the bottom portion, I guess I could use, again, with this one, since I have to identify the basis for each one. So now I'm going to go back to my spreadsheet. I'm going to go back to my spreadsheet. There it is. Okay, highlight. What I did real quickly, I just copied and pasted the titles for each one. And let me do that again. And then I just brought them down on the bottom. That way it has M. Forte and Briggs titles on top. And that's highlight, copy, go back to the, uh, the exam. There it is. And then paste. So that's 1 and 2. Again, as you see on the left-hand side, it automatically saves your answer. But again, make sure you read each question carefully. Okay, next question. Any questions with the first two? Any questions with the first two? You guys get it, or if you didn't get it, do you see how we came up with the answer? Okay, any questions? Again, I'm not going to post the answers. Again, I hope you guys are taking notes from your end or a screenshot. All right, next question. Oh, by the way, what team did Briggs and Forte play for?
Bears.
Thank you. Only one person knew that. Maybe that should be a question on the exam. If I name these random athletes, you got to tell me what the team they played for. What about this guy? P. Kane, a single taxpayer, bought a condo in Chicago for $500,000 and lived in it for 5 years. He is interested in knowing the tax ramifications if he would sell the condo. Then there's 3 fact patterns, right? So what do we have there? What do we have there? What type of transaction is this? I'm going to highlight the transaction and then put it on Excel. But what am I referring to in here? What do you guys think? What should come to mind? He's selling a home.
The sale of personal residence.
Sell personal residence.
Without 121, yeah,
Very
exclusion.
good. So that's great. That's what I want to hear. Sale personal residence, Section 121 exclusion, and capital gains. If there's anything, sale personal property losses are disallowed. All that is actually in play in this particular problem. So I guess you really don't need to put Excel, but I want to see the equations for this because I do want to see gain and loss realized for each one. So what I'm going to do, I'm going to copy and paste this equation. Okay, so this should be, let me make, okay. I'm not sure I like the way it's, never mind, didn't like that. All right, so here are the facts. It's $500,000, right? The basis. There's no capital improvements, right? So it's just $500,000, right? Again, another zero, again, minus $500,000, right? So, and this, I'm not asking for the basis on this one. I'm just asking if there's any gain or loss recognized, and also regarding the capital or the capital, the treatment of the transaction. So on the first fact pattern, hold on. So here's the information. So we got amount realized. The top number doesn't. I guess we can delete what doesn't apply, which is just the boot receive, right? Or just cash, right? Boot receive. What's boot receive? What is boot receive? Why am I still using boot? Cash receive, right? So 690,300, right? He is a single taxpayer. You know what? I'm gonna add another row. I think yeah. And then over here I'm gonna put I'm gonna add another row. So we got realized gain of 100. Is that right? 190,000. No, wait, that's not right. Is that right? Yeah, that's
Yes,
right.
190,300.
Okay, that's right. Now we got recognize. I want to abbreviate gain. So what over here? I'm going to put less 121 exclusion. So up to what is in this case he is single, right? So what's the maximum amount? He can
150,000.
250,000. 250,000. 500,000 for married. So up to 250,000. So in this case, it's all of it. So what's my explanation? No gain or no gain is no gain is, how can I explain this? Recognize because
Is a loss?
no, it's not a loss.
It has a loss, no?
Not this one.
190,300 minus 250 exclusion.
250.
Up to 250. Here's the buzzword. Up to 250. Let me tell you that again. Up
Yeah,
to.
you don't create a loss.
You don't create a loss, exactly.
Because it's personal, yeah. So
No,
there
no,
won't
no.
be.
Well, not just that. Not just that. It's up to 250. So over here we're excluding 190,300. It's up to 250,000. There is no gain or loss recognized. So no gain is recognized because you're. And here's my explanation. You're how can I say it? I guess I could describe it. You're able to exclude up to. Again, this is the explanation. 250,000. I'll just abbreviate. And the sale of principal residence. I guess you could go into detail like why it was met, but that's it, right? Actually, what I'm going to do here is just put 690,300. Forget the boot realize. We don't need that. That's extra information. Okay, so it's up to 250,000, right? So let me actually copy this. I think it's going to be different here. Over here, he sold it for 800,750, right? So what happened here? How much can he exclude? Up to 250,000, right? So how much is recognized? So only 50,750, right? So same thing, I guess. I guess I could just do only 500. 750 is recognized because there you go. And then I don't have to do the rest. You guys see what I did there? Our next set of facts. Last one. Wait, I wasn't supposed to do that. I was supposed to copy the whole thing. The last one. He sold it for 300,120. So what happened here? There's a loss, right?
Yes.
So do we recognize it?
No.
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 Why not?
Personnel.
Personal.
Yeah, no gain is recognized. Can you spell? Because it's no gain or no loss is allowed on sale of personal use assets. You know what? Since I'll probably ask you on the exam, uh, recognize what is the character of this gain? Recognize gain of 50,750 is what? Is
Long-term capital.
long-term capital gain tax at preferential tax rates. You could say the 15% if you want. Or what is it? It's not just 15%. I keep forgetting. 0%? 15%? What's the other one? Credited during Obama's administration. Sort of. What started there? Well, kind of. I'll give you a hint. It's close to 15%, but it's more. Anybody? Does that ring a bell? 20%? Those are the long-term capital gain rates, right? At least understand that there's different rates. Of course, the capital gain rate can change depending. Although I don't see them changing from those rates. They may eliminate the 20%, because the 20% part of that rule was they were. I don't know if it's fair to say that it's way to taxing the rich or the wealthy individual. In a way, it is. The wealthy individuals at the highest tax bracket, depending on the tax year, could be 39.6 if well that's when it was during Obama's administration, or 37% currently. Those taxpayers, their long-term capital gain rates would be taxed at 20%, most of them at least. Any questions with this one? Okay, highlight, copy, go back to this one. No questions? Okay, I'm just waiting for the screen. Number 3. So number 3 is involved. Done. Oh, I like this one. Mia B is my niece, by the way. All right, she's a single taxpayer, owns 2 rental properties with an aggregate loss of $50,000. She actively participates. Mia's AGI is $95,000. What is the maximum loss she can deduct, and would your answer change if it's $170,000? So there's a 2-part question. So because Mia actively participates, and this one you don't need to go to Excel. You can just type the answer. Because she actively participates and her Maggie is less than how much? $100,000. She can deduct. Now again, what is the rule again? Up to $25,000. If it's under, then it's that loss. But in this case, it's $50,000, right? So how much can she deduct? $25,000, right? The remaining, or should I say excess? Excess is carried forward, right? What about the next one? The next one would be what? Because and her Maggie is more than 150, right? She can not deduct. She cannot deduct anything, right? So what happened here in this case? She can't. Her AGI is over 150. She can't deduct anything, right? The excess is carried forward. The excess of $50,000, or you can just say disallowed, is carried forward. Suppose she was a real estate actually, with the real estate profession, I'm not even going to type the answer. But you guys get this part: $25,000 because her AGI was less than 25 or less than $100,000, and she actively participates. And letter B, it would change because her Maggie's over 150,000. It's all disallowed. It's carried forward, right? Suppose she was a real estate professional. What would happen if she was a real estate professional? Would it change your answer to letter A or B if she was a real estate professional? What do you guys think?
Yes.
How so?
She could deduct the total loss regardless of her Maggie.
Exactly, that's it. If she's a real estate professional, she'll be able to deduct her total loss of $50,000. Yeah, regardless of Maggie. Maggie rules don't even apply. She'll be able to deduct all of it. But you just can't say you're a real estate professional. You got to meet a criteria. Refresh my memory. What's that criteria? There's 3 rules, but 2 that I focus on. Are they? Anybody? Any? Wow.
More than 50% of your services are in real estate.
That's one. So more than 50% of your services are in real estate. So you got to spend more than 50% of your time. That makes it hard for people with a full-time job to qualify. And the other rule, which is, I'll give you a hint, it's a specific hour requirement. Over how many hours?
750.
Yeah, over 750 in real estate. The last one, I don't really expect you to memorize it, because if you think about it, the last one is you materially participate in real estate, which is actually the first one. But if you think about it, if more than 50% of your services are in real estate and more than 750 hours are in real estate, if you go back to the material participation rules, you've already met the material participation rules. It's kind of redundant to add that in there. But you're going to find that out about the code. It's you'll see a lot of that in there. There's a bit of redundancy in the code, and that's sort of one of them. All right. Next question. Any question on number 4? Okay. Next question. This is pretty interesting. So Ophelia has no dependents. She's my mom, by the way. Wait, she does have dependents. Well, she doesn't have any dependents. She has kids, but no dependents. All right. She has the following information: 150. Okay. So let's go through this information from the sources of interest. What is not included as income? Everybody should get this one. There's 2 sources of interest. Do we include this amount? Yes?
No.
No. What about this amount?
Yes.
Yeah,
Yes.
that's included. So we got so far we include salary. Again, salary. I guess you could put a spreadsheet, but not you don't have to. 100. This one is a simple one actually. 150,000. U.S. bond. 15,000. Again, this one is pretty simple. Again, I'm not going to do Excel on this one because you don't need to. I don't think, at least. Okay, the next information. There's 2 different partnerships she does not materially participate, meaning it's passive activity. Now, when we think of passive activities, rule number 1, we cannot deduct passive losses, net passive losses. You can only deduct or offset passive income or passive losses against passive income. And then after that, any disallowed amount would carry forward up to whenever you can use it. You can use it when you sell it. You can use it when you die. Well, those are the general rules. There are a couple exceptions, but yeah, that's usually when you can use it, or when it doesn't become, when it stops being passive, when it's converted from passive to non-passive, then you'll be able to use it. So there's 3 ways of it being released: when it becomes non-passive, when you sell it, or when you die. The last part is it gets a bit more complicated when somebody passes away, but it does get released. So in this case, there's a partnership. A had a loss of $30,000. Basis is 35,000. The reason why I threw that in there because the hurdle number 1 that you have to cross is section 465. Is there enough basis to deduct the loss? The first question: do we have enough at risk to deduct the loss? And then question number 3, or the question number 2, I should say, Did they materially participate? If so, then you're able to deduct the loss up to that risk. If not, then it's considered passive. You could only offset passive losses against passive income. So this is a passive loss, $30,000. She has more than enough basis to cover it, so she's okay. But the next rule is she could only use that loss if there's passive income. So let's take a look at the next fact pattern. So partnership B has $20,000 basis, but no, the income was $20,000. The basis was 25. Not really relevant the basis, but the income is $20,000 of income. So can we deduct the loss? No. So net PAL 0, right? And this one is actually pretty basic. That's it, right? What's the AGI? I'm not going to use double lines here, but you guys get the gist of it. AGI is how much? I don't have a calculator.
165.
165? Wait, right? 165, right?
Yep.
And then we subtract SD, right? So standard deduction, which is higher, 12,200, which equals taxable income. What's the answer? Anybody? 165,000.
153. Oh no, 152,800, 152,800.
Everybody agree with that? 152,800?
Yep.
Yes.
Okay, I'm not going to put the underlines, but you guys, this is just asking you about passive activity losses. Not something I'm going to ask you, but just something this does come a lot in practice. You will see people when they get a K1 from a partnership or an S corporation, you should ask if they materially participate. If not, you can't assume that they're able to deduct that loss. Question 5.
Do you want us to show the net PAL as 0 in our calculations? Or like in my explanation, I said that the 10K loss is not
That's fine.
deductible because it's passive.
That's fine. Yeah, you don't have to put net PAL 0, but this is more for like illustration purposes. As long as you got to 165,000 and 12,200, yeah, and again, the computation is correct. Yeah, that's a good point. Yeah, you're right. As long as you understand the concept, you're not able to deduct a PAL, and you don't have to even put it here as long as you explain it on the bottom. At the bottom, unless you could explain, what did I say? Muni bond interest is excluded, and I can't even spell today. Excluded, and how would you do net passive losses are disallowed and carried forward, right? Something like that. Yeah, that's fine. Again, as long as you understand, the concept, you don't have to put it here. As long as you understand that you don't include it. Yeah, that's fine for this one. Okay. Next one is another property transaction problem. This one relates to a machinery that's used in business. This is a machinery used in business with accumulated depreciation. What should you think of when you're dealing with a business used or an asset used in business with accumulated depreciation?
Recapture. and/or
Recapture.
gain.
But before that, recapture rules, there's like the whole table that you got to think about. Recapture rules are under or a subset of what? If you think about it.
Section
Yeah,
1231?
exactly, 1231. 1231 is the main section. That's what defines all fixed assets. So that's what I was, wanted you to think of. So 1231 is fixed assets. So this is a 1231 transaction, right? And I think that was you, Matt, that said, or Dan, that said recapture rules. Then you think about recapture. But first is fixed assets, and then recapture. Sort of like that table. If you go through that flow chart that we created, the book has one. You think of the 1231, and then it goes through the gains. It goes on one side. You go through the gains. You go through all these recapture rules. you go through the losses, it just goes straight to losses. So that's sort of what we're doing in here. All right, let me go to the spreadsheet that we were using. Okay. Why isn't it showing? Oh, there it is. There it is. So I want to copy. Okay, so I'm going to use the same spreadsheet because it's almost the same information. Well, same equation, sort of. Now I want to go back. I'm going to go back to the problem, highlight it, copy. No way. Okay, I'm going to take this one apart into two separate pieces. There we go. All right, so the machinery cost $75,000 and $20,000 of accumulated depreciation. What is the adjusted basis here? 55,000, right? So there's three different fact patterns. First, he saw the 60,350. Is that right? Yeah, 5,000. Yeah, the first one he sold it for 60,350. And then the last one, oh, sorry, the last one should be 40,421. Okay. So first one he sold is 60,350. So the equation is actually a bit different. It's you don't do it like a subtraction, but there's a 1231 for recapture up to the accumulated depreciation, and then there's 1231 gain. Sort of think of the rules. Up to the accumulated depreciation is recapture as ordinary income, right? So up to 5,300, well, actually up to 20,000 is accumulated is taxed as ordinary income, right? There's no capital gain here. So again, this equation is this minus that. So how would I explain this? So how would I explain it? The total gain of 5,350 is recaptured as ordinary income, tax at regular tax rates, right? Something like that, right? Any questions with the first one? Seems pretty straightforward, right? Now the next one, I'm not sure the next one even, I'm gonna delete the explanation because I don't know if it qualifies. The next one, he sold it for 80,750, right? How much is ordinary income? What do you guys think? Up to
20.
$20,000, right? So up to $20,000. So in this case, up to $20,000 of allowed depreciation or allowable is tax or recapture. Actually, I can just copy this part, right? And sort of add something here is recapture ordinary income and tax at regular rate. The excess of like 5,750 is 1231 gain. And assuming that this was it, and tax at long-term capital gain rates, right? Again, usually 15. or 20. How come I did not use 0? What do you guys think? Why did I not use 0 here? Is it conceivable for somebody that has a fixed asset and this is just on the transaction alone? I guess it is possible, but is it conceivable for somebody, to have this size of a gain to be taxed at the lower tax bracket? Unlikely. So it's unlikely that the capital gain rate is going to be taxed at the 0%, because again, if you think about the total income as a whole, the taxable income is going to be, probably taxed at the higher rate. But it is possible. That's the best that I could say. All right. So in the last transaction, he sold it for 44,201, right? Do recapture rules apply here? No, right? So this is a 1231 loss. Recapture rules do not apply to losses. Hence, the total loss is an ordinary, well, before ordinary is a 1231 loss. Again, think about that first. If you go through the table, 1231 gains, losses. If it goes on the gain side, then you got to go through those hurdles of the depreciation rules. And then the depreciation is ordinary income. Then it's section 1231 gain. And then you offset it against 1231 losses. And then if there's still gain, then that's taxed at the lower rate. So you can't just go straight to the long-term capital gain rates. It's a 1231 gain before it's treated as a long-term capital gain. Just think of it that way. So I guess the same thing here. It's a 1231 loss before it's an ordinary loss. Hence, the total loss is a section 1231 loss. So I said that backwards here. 1231 ordinary and treated as an ordinary loss and fully deductible. Does that even make sense? Fully deductible? Fully. Totally? Totally doesn't sound right either. Let's say fully deductible. What sounds better? Fully deductible, totally deductible? Neither of them sound right, grammatically correct, right? One of the things you're going to find out about the way accountants talk, we don't always use correct grammar, like fully. Well, that's just one of the examples. I'll give you an example of another one. Unreconciled. Unreconciled is not really a word, right? But we use that a lot in accounting. Irreconcilable is a word, but unreconciled is not a word. That's a term that we use, but it's still used in practice. Just kind of making fun of the way we talk. All right, highlight this, Control C. Any questions on this one? Any questions? Did you guys get it? Pretty straightforward. Okay, copy and paste. The next few ones are going to be self-employment tax related. So 7, 8. Let's wait for 7, 8, and 9. We'll do those in a little bit. Let's do actually let's do 10, 11, 12, and then we'll do the other ones backwards. All right, for this one, what do you guys think? I think I asked you this question before. Warehouse will be depreciated under mid-month convention, right? Straight line over how many years? 39 years, right? Equipment and furniture. What happens here? Furniture will be depreciated under what? Mid-month?
Quarter.
Mid-quarter. See? Thank you. Mid-quarter convention. Why? Because more than 40% of personalty assets are placed in the last quarter. Yeah, I don't want you to go through the computations. The tables are there. This concept is tested, heavily on the CPA exam and pretty much anywhere. You got to understand the conventions. Software does the depreciation for you, but you got to make sure that the information is spitting out the correct, data. You won't believe that sometimes depreciation does get computed incorrectly. No salvage value for tax purposes. That's an accounting method. All right, dependency rules for qualifying child. Again, quick review. For qualifying child, so qualifying child. So when you think of a qualifying child, you think of a RASH, right? Relationship, age, again, under 19 or 24 and FT student, right? Self-support and home, right? Qualifying relative, gross income is less than exemption. What is it about now? Exemption is how much now? 4,000. What is exemption now? Is it 4,200? Say index. We'll talk about that. It's again, whatever it is, about 4,000 or so. Support more than 50%, right? And relative or member of household for whole year. Okay, pretty straightforward, right? Question 12. Which trial courts require petitioning, payment before petitioning? What do you guys think? I forgot. It's U.S. District Court and U.S. Court of Federal Claims, right? That's it. U.S. Tax Court requires payment for, not payment, U.S. Tax Court requires petition with 90 days. Okay, so we got 3 questions left. Let's do the net operating loss problem, and then we'll do the self-employment tax problem. All right, you guys ready to do the net operating loss problem? This one I'm going to put in Excel because it does involve, you don't have to, but I would prefer that you put in Excel. This one does involve quite a bit of computation. So I'm going to copy, I'll just put it on the bottom. Okay, so I'm copy, paste. All right, so step by step, what's the first step that we got to figure out? Figure out the net loss, right? This one is sort of simple, right? So this one, net loss, I'm going to put equals, what's my net loss? We got 175,000 minus 250,000, right?
We don't see your Excel sheet.
Oh, sorry. I thought it went through. All right, so I copied that. There it is. So I copied, highlighted that, and then I copied it. All right, so what's step number 1? Figuring out the net loss. So I went ahead of you guys, sorry. But you guys already knew that. The net loss of the business from Schedule C, so do Schedule C first, is 75,000. That is not your net operating loss. That is just step 1. Step 2, which I guess you could put step 2 and 3 in together, is figuring out adjusted gross income and taxable income. And then step 4, the final step, is net operating loss. So over here, we have to add salary, right? Dividends, right? That equals AGI, right? And then we subtract standard deduction, right? That equals taxable income, right? So now we could put these numbers in place. So this equals 45,000. Dividends is 2,200. Adjusted gross income, standard deduction. Oh, we're taking standard deduction, right? Minus 12,200. So taxable income is 40,000, right? But that is not my net operating loss, right? That's just your taxable income. So your taxable income is not my net operating loss. So I got to go through another step, right? So over here I'm going to say NOL computation. So start out with my taxable income, right? My taxable income, 40,000. What do we add to that? Add non-business, well, because I gotta put, you guys see what I'm doing when so it doesn't read it as a formula. I'm putting see what I did, the apostrophe? You guys see what I'm doing? That way it just reads it as a text instead of an equation. So if I start adding plus, and I'm not, it starts thinking I'm trying to do a formula. To prevent that from doing, if you just want to show me a computation, I'll just put, you see what I'm doing, the apostrophe, and then I just type away. Then it just reads it as a text. So plus, I guess I'm going to abbreviate here. We got non-business what? Deductions minus non-business income, right? So in this case, what would that be? Non-business deductions would be 12,200 minus, again, I want to see the math, so I want you to show me how you came up with that number. So in this case, what would that be? 10,000, right? 10,000, right? So in this case, operating loss equals how much in this case? Oh, sorry, that's not even an equation. What is the net operating loss? $30,000? That number doesn't sound familiar, does it? Should, right? It doesn't always work, but sometimes it's a good way to check as a check figure. It's the sum of your active income. Doesn't always work out that way. You got to go through the math, but sometimes, in this case, it is. It does work out that way because that's your active income, right? So net operating loss is 30,300. I mean, no, just 30,000. Forget the rest. Any questions on this part? Again, I'm gonna highlight that, copy, and paste, and we got 2 more questions. Are you guys having fun yet? Yes? Come on.
If we mistakenly pasted as a picture, but it's still pretty obvious how we got to certain numbers, is that okay?
What do you mean on the exam?
Well, I won't be doing it for the exam, but I did it for the quiz.
No, that's fine. And if you do it, that's fine. As long as I can read your answers. Again, the quiz, I'm not grading it on accuracy. I'm grading it on completeness. I want to show you. I want to see your work. If you completely answer all the questions 12, and there's substance, I see computations. Even if you didn't get it 100% correctly, I'm going to grade it on completeness. Now, let's say you answer 10 out of 12 questions and you left 2 of them blank. Well, that's a no-brainer. Then you get 10 out of 12 questions correct, assuming that the other questions are answered completely. So I'm going to grade it more on completeness. But yeah, I got to see your computation. I got to be able to follow your computation. If you did it through if you did an Excel spreadsheet document, that would be preferred. If you printed it out and scanned it and as a PDF, that also works, or as an image file, that also works. Or how did you do it? Did you just scanned it, or you pasted
I,
it as,
c- I copied my Excel work into a Word document that the questions were on and just pasted the Excel work as a picture. So you can
that's
see,
fine.
like, you can follow it and everything, but I was just curious.
Yeah, that's fine. Again, I'm grading it most again on completeness. I want to see your work. Uh, Again, as long as I'm able to follow your work, that's fine. All right. So number 7 and 8. this is a pretty involved question. It involves multiple steps. Yeah, and on the exam, this is going to be more comprehensive. A lot of equations. You got to figure out what the operating expenses are. You got to figure out net income, but the concepts are going to be, pretty, self-explanatory. All right, so first one I'm going to do, figure out AGI deduction. We sort of have to sort of create a new spreadsheet, right? Not a new spreadsheet, a new tab. Let me go back to the spreadsheet. Going back to the spreadsheet. Spreadsheet. There it is. All right, I'm going to add a new tab. There it is. I'm also gonna, since I'm already here, I'm also going to, because I'm gonna need this information for the next one. I'm gonna go back to the quiz. And then so that way you guys can see it all flow together. I'm gonna copy the bottom equation as well. And go back to the spreadsheet. I copied and pasted the data from both so that way it can flow better. So you guys can see what I'm doing. Let me make it bigger so you guys can see. Did I just delete all the relevant information from the first one? I think I did. Wait. All right, let me get the information from the first one again. It was just $65,000 of business expenses and $100,000 of business income, right? Okay, right. So step number one, net income, right? What's the net income in this case? So it equals 100,000 minus what? 65,000, right? 35,000 is net income, right? Step two, again, I'm going to multiply it by 92.35%, right? So it equals 35,000 times 0.9235, right? And I'm going to round it to the nearest number, to the nearest whole number, nearest dollar. So we got to round to the nearest dollar in this case. So yeah, I'm going to put lines so that way you guys can follow. First one, this is SE base, right? And then we multiply that times 15.3%, right? Times 5, right? And that equals 4,000. That's the SE tax, right? SE tax. And this, so this times 50%, right? Now you see, even though I'm not using those fields as or those cells as computations, I'm doing that so you guys can see the work. So 4945 times 50%, and that's the AGI deduction, right? I'll just abbreviate AGI deduction, right? So and that's your answer, right? Now, this is the answer for number 7. And I'll get back to that in a few minutes, but this is the answer for number 7. Since we're already here, let's take it to the next step, right? Oh, I just noticed something from the next equation. You know what? I'm going to copy and paste this to the problem. Go back to number 7. They're pretty straightforward. This one, 3,500 of insurance premiums. I forgot to, I deleted that by mistake. Why is that relevant? Why is the 3,500 relevant in this problem? Why is it relevant? Anybody?
Reduces AGI.
Yes, it's a deduction for AGI, so 3,500 health insurance premium. Also, SEP contributions and so forth. There's nothing in terms of SEP contributions here. So we got, now we could do it step by step. So we got net income, right? Net income, which is 35,000, right? And then less deductions for AGI. So we got 1/2 of SE tax, right? And then what's the other one? Health insurance premium equals AGI, right? And then we subtract standard deduction, or no, itemized deduction, right? After itemized deduction for self-employed individuals, what do you think of for self-employed individuals after itemized deduction? What do you guys
QBI.
think? What did you say?
Qualified business income.
Yeah, QBID, yeah, qualified business income deduction. Yes, this is self-employed individuals. You don't get that for a net loss because it's already a net loss. All right, a couple of people already identified that, so that's good. Deductions for AGI, we already got one, 2473, right? Health insurance premium, that's 3,500, that's given. So adjusted gross income in this case would be 35,000 minus the 3473 minus the 3,500. Did you guys get 29,027? If you didn't, did you guys see what we did here? You guys see it? Good, 29,027. Next, we're not taking the standard deduction, we're taking the itemized, right? Right? And somehow we have to figure out taxable income. I know something about my QBID. I know it goes something like it's 20% of something or 20% of something else, right? So what was it over here? QBID is 20, let's just go with the 20% rule. 20% of the lesser of modified taxable income times or what? Or QBID or QBI, right? So in this case, what is modified taxable income? It's the taxable income before the QBI deduction, right? So it's 29,027 minus your itemized deduction. So 16,527. What is the QBI in this case? It starts out with net income minus half of self-employment tax, 1/2 of self-employment tax minus your health insurance premium minus your SEP contribution. In this case, actually, because I did it backwards. In this case, it would be the same thing as your adjusted gross income. Not always the case, but in this case, it just happens to be the same thing as your adjusted gross income. Which one is less? Which one is less? Come on, class. Which one is less out of those two numbers? Which one should I take? Anybody?
MTI.
MTI.
Yeah, MTI, modified taxable income. Remember I said that's usually a shortcut. If most of their income is coming from net income, then it's going to be the modified taxable income. If they have other sources of income, such as salary, then qualified business income may be less. So in this case, because think about it, their main source of income, their primary source of income, all of it actually is from self-employment activity. So it's going to be amount of income that's going to be less. But you do got to go through this math, just so you know. But in this case, it was a shortcut way of doing it. I don't have to figure out the 20% of 29,000 because I already got my answer, right? So over here, taxable income is 13,022. Actually, I'm not even going to put less deductions for AGI, but you guys already know what they are, deductions for AGI. Less deductions for AGI. That's me being redundant again, and it's not what I'm trying to do today. Any questions with this one? I want to take it a step further, but any questions on this one? Okay, so now I'm going to copy and paste this to number 8, and we are done with time to spare. Again, try not to use abbreviations, only if they make sense. Spell it out when possible. But in this case, I use abbreviation for the interest of time. But that's about it for this one. Any questions on the quiz? Now you see how it's automatically saved. Now you go and click submit and submit quiz. Submit, it's saved. Okay, go back to the Excel spreadsheet. I want to figure out the taxable income here. So the tax liability. Taxable income. Again, for practice, I hope you guys were doing this for practice. Taxable income is 13,222. I'm gonna go to the book. Okay, actually, I'm not doing this anymore. Go to the book. Okay, what tables am I using? So 12,200. So I'm using 2019 numbers, right? 2019 numbers. Okay. Standard deduction for 2019 is 12,200. So I'm using 2019. So go to the next page. This person is single, right? Single. Taxable income was what? 13,000 and change. What's their tax bracket? Can somebody help me figure out their tax bracket for 2019? You guys see it? You guys see it? You guys see it? Don't tell me you guys don't see it. You guys are gonna have to do 12%. Thank you. So 12% of the amount over 9,700 plus 970, right? So now we got the numbers. So everybody sees it's right there between 97,000. I mean, scratch that. 9,700 and 39,475. And you guys, we went through this before. I trust you guys are already comfortable with that. So go back to the spreadsheet. Okay, now I'm gonna put 9,700, right? So of the amount in excess of 13,000 or 9,700, 3,522. That's tax at 12%, right? So this is tax at 12%, right? And then wait. Then we're gonna add what? What happened? This plus 970, right? So equals 1393, right? So we're adding 970, right? Okay, so total income tax liability is 1393, right? But is that the total tax? No, right? So total income, well, total tax is the sum of your income tax, which is what we just figured out. 1393, right? And SE tax, right? So SE tax that's the 4945, right? So total tax equals the sum of those two numbers, right? So that equals, again, rounding, 6338, right? So suppose they only paid $6,000. Let's say payments, federal tax payments was 6,000. What happens in this case? So they only made $6,000 estimated tax payment. There's a tax due, right? Tax due would be the difference between the two, right? Suppose there was a $7,000 payment. Then there's going to be a refund, right? That's it for this one. Again, you will have a problem that walks you through a self-employment tax situation. That's going to be worth like 40 points on your exam. Any questions? No questions? Okay, at all? All right, so the next thing I'm going to do, I said I was going to go over that like-kind exchange problem. I'm going to show you the answer. Did any do the spreadsheets like I asked? Did you guys do that? Remember the spreadsheet I told you to, for practice, do the spreadsheets? Well, I still want you to do it for practice. I'm going to show you the answer. We sort of I felt like we went through this already. Did we go through this already? The like-kind exchange problem? Well, we'll go through it again. I think this is where we left off last week. Okay, property transaction problems, like-kind exchanges. Yeah, the problem that I wanted you to do in here, this one, again, we did go through some of the computations. I don't think I walked through all the basis rules. $39. Didn't we go over this one? Yeah, we did. I'll show you the answer for 39. I don't think I have this on Brightspace, but I'll show you the answer the way the book presented it. Again, the way I would compute the basis is a bit different. You'll get to the same answer. I would prefer you do it my way. Keep in mind that the authors are not writing your exam. I am. So if you want to get more points, follow the way we've been doing it in class. You'll get the same answer. You know, they just have I guess a backdoor approach. The way I like it, I prefer doing it because it would help you in transitioning into accounting. In accounting, if you use my equation, it works better with my equation. But either way, you'll get to the same answer. Nonetheless, I'll show you the answer the way the book has it. This is for 39. Hold on. And then we're gonna do a short lecture notes on income, other taxes, and credits. And then we'll do more questions. If anybody has any questions. And this is 39. And there's a lot of good problems here, but we only have time to do the ones that we've already done. Where is it? 39. Here's the form, by the way. This is the form you need to use, 8824. Pretty straightforward. You got a description of the property you're exchanging. The dates have to be in there. You know, pretty self-explanatory. But you do got to fill this out. You know, just because you wanted it to be a like kind exchange and assume that it qualifies, you do got to work through this equation or through these forms. Okay, here's here's a different way of. This is the answer again. The way they presented it, they're starting off with. I guess it's just in my opinion, it flows better with the equation because this is the way they're doing their basis. Their basis is a combination of the postposed gain or loss, and then you adjust it by the fair market value of property received. So they're starting with the property received rule, and then you just make an adjustment to any postponed gain, which I think is a bit backwards. I like to think of it just back to accounting rules, debits and credits. It's the basis of the old property. You think of it as a journal entry, credit to your old property. Add gain recognized, that's another credit, right? Add cash paid, that's another credit. And then what all those numbers add up would equal your debit. Or another way of doing it, if there's a cash debit, then you subtract your cash received. So if you go through that equation, the one that I mentioned, you start out with the basis of the old property, add gain recognized, add cash paid. You know, that's actually doing it debits and credits way. And I am, I guess, still an accountant. Even though I'm a tax person, I'm more of I guess I'm an accountant. That's why debits and credits make sense to me. Nonetheless, you'll still get the same answer. It's just the explanation of the basis is a bit different. They're starting out with the fair market value of the property received, and then they make an adjustment to any postponed gain or loss, which doesn't really coincide with accounting, doesn't really coincide with debits and credits. You'll get the same answer either way. Again, it even mentions it here, you know, on the bottom, like you know, depending on what method you use, you would get slightly different answers or different ways of getting your answer, but the answer is still the same. Any questions with this one? Again, I want you guys to do this for practice if you haven't done so. Again, the exam is going to be available starting midnight tomorrow. Actually, if you think about it, if you want to stay up late and study, you can cram everything in and you can start taking the exam as early as well, in a couple hours, actually, if you want to look at it that way. A lot of fun stuff, right? No, or you could wait till Wednesday, which I think that would probably be the best. You know, if I were you, if I were in your shoes, I would wait until the day of. That would give me more time to study. But nonetheless, if you feel prepared, you can start taking the exam as early as tomorrow if you feel prepared. I'm not going to start grading it until everybody's exam is submitted. So even if you submit it early, do not assume that I'm going to grade it early. It just means you did it early. And don't start telling your fellow classmates what was on the exam because they would already know. I'm already telling you what's on the exam. You still got to study. I would use the Tuesday to study and take it on Wednesday, but you could use, you know, Tuesday to take the exam. Any questions with property transactions? Because this is going to be the last you're going to see it until Wednesday, until the final. No questions at all? Okay, because you're not asking any questions, we're going to move on to the next section. Again, this one I'm not going to test you on. This is credits and other taxes. I do want you guys to know what it is. This is chapters 12 and 13 combined. Non-refundable credits and refundable credits. And other taxes. Well, we already talked about other taxes in a way, right? We already talked about credits. So if you think about it, as we've been talking about it in class, some of this stuff should be sort of a review. to some extent. One of the things that we covered, the difference between a tax deduction and a tax credit. Which one is better? Well, it depends. Tax credits are usually better because it's dollar for dollar. Whereas tax deduction, if you're getting a $10,000 tax deduction, that's not how much money you're getting back. It's 10,000 times the effective tax rate. That is your actual tax savings. That's the biggest misconception about a tax deduction. Tax deduction is not dollar for dollar. It's more a percentage based on your the tax saving is a percentage based on your tax rate, your effective tax rate. Whereas a tax credit, whatever the allowable credit is, it's usually dollar for dollar up to any limits. So you usually get more for tax credits, generally speaking. Now, credits are split into two different categories. What's a non-refundable credit and a refundable credit. And we started talking about this briefly, towards the beginning of the semester. A non-refundable credit, the credit is limited to its income tax liability. Not self-employment tax liability, income tax liability. It's limited to that. So you know how we walk through the income tax schedules, or we're using the tax tables. We haven't used the tax tables here. You're not going to use the tax tables on the exam. You're using the schedules, tax rate schedules, like we did. Once we figure out the income tax, your non-refundable credit, it's up to that amount. It can't exceed that amount. That's the limit. Refundable credit, on the other hand, can exceed that amount and can generate a refund. So that's the difference between the two. You got to do the non-refundable tax credit first. Non-refundable tax credit goes first, then the refundable tax credit goes. In terms of refundable tax credits, there aren't many, and it's sort of a combination of some. If you think about it, the federal income tax payments, estimated tax payments, or payments through your withholding through federal income tax withholding, that actually it's a credit. It's a refundable credit. As we went over the example with the liability, we apply the total payments against the tax liability. If it's more, you get a refund. If it's less, you owe money. So again, the tax payments itself can generate a refund. Again, even though you don't think of it as a refundable credit, it is. Earned income tax credit is geared towards individuals that have low income, and that's a refundable. This one is I guess, sort of phased out in a way because there's no Obama care in a way. Nonetheless, it's still a refundable credit. The premiums, if you get, if you get the health insurance to the market share, you get a credit. Either get an advance credit through your as you're paying it, or you claim the credit on your tax return. That's a refundable credit. I'm not going to explain the difference between the two if you get too much. Well, I guess I can briefly talk about it. If they advance too much than what you should have claimed, then you just pay the difference. It's kind of goes without saying. If they give you too much of the credit as you're paying your premiums, you're not going to claim it as much, or your income was too high when you file your taxes. You're just going to pay it back. Similar things happen with earned income credit. People would request earned income credits to be added to their check, but when they file their taxes, if they don't qualify, they got to pay it back. Advanced earned income tax credit is no longer available. So just so you know, people did do that before. It did cause a lot of fraud. Now it's not allowed. Additional child tax credit can qualify under some circumstances, and so does the American Opportunity Tax Credit. That's one of the higher education credits. Now, here are your non-refundable credits. Non-refundable credits, there's actually quite a few of them. There's more non-refundable credits than refundable credits, as I mentioned. Child tax credit, we talked about that in great detail, under 17. Education credit. So here's where actually child tax credit and education credits, the American Opportunity Credit, that's some of it can be refundable, same as a child tax credit, but not all of it. Lifetime learning credit is not refundable. It's not non-refundable credit. Dependent care credit, we'll talk about that in a few minutes. In essence, that's when you're either working or you're going to school full time. You have a babysitter. You got to disclose your babysitter's social security number, or your daycare's taxpayer identification number, and then you get a credit for that. There's a retirement savers credit that's available that started out during Bush's administration. I'll talk a little bit about that. Adoption credit's been around for years. They have made it more friendlier. That's one of the non-refundable credits. actually pretty much the only one that I can think of, the most common one that is carried over. And then we have the foreign tax credit. If you have taxes paid in a foreign country for income that's taxed here, you're entitled to a credit. Now, the general business tax credit is actually a combination of several business tax credits. We'll talk a little bit about that in a few minutes. Then there's the elderly and permanently disabled tax credit, energy efficient tax credits. Those do come from time to time. It's not the same every single year. They do change the definition of energy efficiency property from year in, year out. It's not always the same. This is a very interesting credit. Always do your research on the energy efficiency, credit. Like one year, it was just on solar power property, which I thought was pretty interesting. That was just several years ago. Just on solar power property qualified for energy efficient credit, and then they made it more, friendly, windows and certain doors and so forth. Again, every year is different, but it is something that's out there. Small business employer health insurance credit, that's still available, but that's part of the Obamacare credits that were available to help fund health insurance costs. Again, it's still somewhat there. So let's talk about the child tax credit. This is the one that we've been talking about. Well, actually, both of these credits, we've been talking about these credits since the beginning of class. So this should be more of a review. The child tax credit, it's a non-refundable credit, and it's going to be a non-refundable credit on the exam for any dependent under the age of 17. Again, you got to follow the child test rules, but you got to use 17 for the age. So you got to be under 17, and it's up to $2,000 for each qualifying child. So each qualifying child, all the other tests are met, but it's the age test is under 17. Child tax credit is partially refundable up to 15%. So it works a bit. The way it works, some of it can be refundable if there's earned income, there's active income in excess of 2,500. Some of it can be refundable, and that's 15%. Up to 15% can be refundable, but you got to do a lot of computations. Higher income will not get the refundable. Probably won't get the refundable portion. Unlikely they'll get the refundable portion. Okay, the non-child tax credit, that's the other credit, the credit for other dependent. That's the $500 credit. That's assuming that all other tests are met, qualifying relative test or qualifying child test. Except when it's a qualifying child under the age of 17. So that's the $500 credit. Now it does phase out. For single taxpayers, it's $200,000, and married taxpayers, the income, adjusted gross income is over $400,000, it starts to phase out. Don't worry about the phase out rules on my exam. Just focus on the main rules: $500 credit or $2,000 credit. By the way, on the self-employment tax problem, it doesn't have any tax credits. Just keep that in mind. It doesn't have any tax credits. The only thing that it will have, it will have the payments, the federal tax payments, and you got to go through everything else. The education credits. This is the ones that you should be using. I think some of you are familiar with. So this is a quick review. American Opportunity Credit. This is available for qualifying education expenses incurred for the spouse, dependent, taxpayer for the first 2 years of post-secondary education. That's not right. Yeah, that's not right again. It should be 4 years. My bad. This should be 4 years. Why did I say 2 years? Can somebody tell me why I said 2 years? I'll give you an A in class if you tell me why I would say 2 years. Anybody know?
Because
Anybody?
Truman's 2 years.
Because what?
Truman is 2 years.
Truman?
Oh, sorry, Harold Washington. Truman's my college.
No, that's not why. Well, actually, no, that's not why. Make a correction in your notes. It's the first 4 years of post-secondary education. Well, if nobody knows the answer, you guys didn't read the chapter. It is mentioned in the chapter briefly. Just to give you a quick history of the education credits. Education credits started during Clinton's administration, towards the end of his administration, late 90s. But back then, the lifetime learning credit was there, but it had not the American Opportunity Credit. It had the what was that credit called? Anybody know? Anybody know? It was called the Hope Credit. So the Hope Credit was actually for the first 2 years of post-secondary education. Computation was slightly similar to what it is now. In terms of the computation, like the 100% of the first, $2,000, that was sort of there. The refundable portion wasn't there, but it was the first 2 years of post-secondary education. The reason why I bring that up, there is no Hope Credit anymore. The Hope Credit was actually improved during Obama's administration, and they changed that into the American Opportunity Credit. They made it available up to the first 4 years of post-secondary education, so it's more friendlier now. So I guess to your point on it being, I guess some of it that is true, because they wanted at the very minimum, they wanted people to at least go to at least go to community college or 2 year school. So at the very least, and they'll cover most of the cost. So I guess they extended that credit and said, well, let's make it to the first 4 years up to your bachelor's degree, which makes a bit more sense. So it's actually covering, some of your costs in here. So here's how it works. First 4 years of post-secondary education, the 2 year rule doesn't apply. The education must lead to some kind of degree, a certification, or other credential. Vocational school does count as long as the vocational leads to some type of credential. Again, it doesn't have to be a degree. So even if you go to what school am I thinking of? There's like several schools for auto mechanics, like Lincoln Tech is one that I can think of. There's also another one. Nonetheless, that leads to a credential. You get some type of certificate that leads to a job. So that would work. If you get a degree, that'll work. College has several certificate program that actually works as well. Um, even if you're trying to fulfill your requirements for your even I would even argue with this one, if you're trying to fulfill your requirements for the CPA, because again in Harold Washington, the CPA exam, again, if you take the courses, you can get that certificate before you take the exam, and that would work. So the whole American Opportunity Credit works. But here's the part that about this particular law that was there since the 90s. The student must not have a felony drug conviction, and they haven't eliminated that particular rule. So let's say I'm in my first 2 years of post secondary education. I'm in my first year of college. I'm enrolled full time, and I'm pursuing a bachelor's degree or an associate's degree. It doesn't matter. But let's say I got convicted for drug possession. It's a felony drug possession, not a misdemeanor. It's a felony drug possession. Because it's a conviction, I don't qualify for this education credit, right? That doesn't mean that it's all lost. I can still get the lifetime learning credit. Just because I had a felony drug conviction, I don't qualify for the American Opportunity Credit. I always found that interesting. I'm sure that has something to do with somebody told me on one of my classes that has probably something to do with financial aid, which may make sense. It has something to do with financial aid. Could make that could make sense. All right, in terms of the credits, the way it works, maximum allowed is 2,500, 100% of the first thousand, 25% of the second thousand. The credit is non-refundable, partially refundable, up to 40%. I'm not going to get into the specifics of how much going through the math, but just know it can be refundable. It starts to phase out. When your income AGI is over $80,000 to 90,000 if you're single, 160,000 to 180,000 if you're married. This is index, by the way. Index for inflation. These are the most current numbers. No double benefit rule. So meaning if you're already excluding income because tuition reimbursement through your employer, or you're using a 529 plan, or you're excluding it because it's a scholarship, you can't take the education credit. Again, no double benefit rule. If you're already excluding it from income, you can't take the education credit because it's tax-free money. So that's what that rule means. You can't use tax-free money for a tax credit. Lifetime learning credit. Lifetime learning credit, same rules apply for your dependent, yourself, or your spouse. Same rule, as long as it leads to some kind of degree, certificate, or credential, it qualifies. Maximum allowed is 2,000. Now notice this one does not have a requirement in terms of the time. The education credit for American Opportunity Credit, you got to be enrolled half the time. So that would be at least 6 credit hours, right? In most colleges, it's 6 credit hours. Half the time is right. That's 6 hours or 3 or 9 hours. You guys should know this. You guys are 6 hours, right? So at least 6 hours you have to be enrolled. So that's 2 classes. You can make it work if you're taking at least 2 classes or more. Lifetime learning credit, you can take a class and that's fine, and the lifetime learning credit works. Or if you don't meet if you fail the American Opportunity Credit because of drug conviction, then you can go to the lifetime learning credit. And not just that, I also want to point your attention to American Opportunity Credit. Please put your microphone on mute, please. Again, I want to point your attention to that the American Opportunity Credit is for the first 4 years. Do you see anything like that on the lifetime learning credit? No, right? The lifetime learning credit, I guess the way I interpret that is think about perpetual students or professional students, students that go to school forever. There are some students like that. Some students pursue their PhD, work on their PhD for like 20 years and still working on their dissertation. Yes, I've known people like that. Not to knock them, sometimes it takes them a long time to do research. Nonetheless, I think that's what the credit was for those students, not those long-term, not just PhD students, just for any students that wants to continue their education lifetime. So it's a lifetime learning endeavor. I think there's some truth to that. There's less limitations on this, so it kind of works for everybody. So the dependent care credit, next credit we're going to talk
I
about.
had a question. I put it in the chat.
What's the question? What's the chat? Oh, you can't talk? Wait, how do I get to chat here, participants?
He said, is it the first 4 years or the first 4 years claimed?
First 4 years. That's a good question. My interpretation is the first 4 years. So in other words, if you have a bachelor's degree, you do not get the American Opportunity Credit. So you could get the lifetime learning credit. That's the way I interpret it. Again, if you have a bachelor's degree first 4 years, again, even if you didn't claim it the first 4 years because of whatever reason, you had tax-free money, you're not eligible for it. The lifetime learning credit is for any year after that. So again, as long as you have a bachelor's degree, you won't get the American Opportunity Credit. Again, that's my interpretation. And even if you go through the due diligence worksheet, it asks you that question. So even further, I believe it's there's it won't work if you can't get the American Opportunity Tax Credit if you're going to graduate school. Graduate school that's the lifetime learning credit. That's what that's geared towards. And if you think of the intent itself, the intent for the American Opportunity Credit was the intent for the Hope Credit. It's used to fund again the 2 year you hit it on the nail. Your associate's degree that was the first credit, the Hope Credit, and then for the American Opportunity Credit, it's used to fund or at least help you with some of the funding for your bachelor's degree. So if you already have your bachelor's degree, you won't qualify for the American Opportunity Credit, even if you never claimed it. So it's something to think about. But you can always find somewhere else to claim it, either lifetime learning credit or tuition and fee deduction, which I don't have the tuition and fee deduction mentioned here. But that's another deduction that could be qualified. Tuition and fee deduction did go away for a year. That's one of those tax deductions that didn't exist. It expired in 2017, so didn't exist. 2017, December 31st, 2017. Didn't exist for tax year 2018, but a tax bill that was passed last year, no, actually this year, that extended it for 2 more years. So now we got to amend returns for a couple years. It's very confusing. So that's the tuition and fee deduction. So look at the tuition and fee deduction. That may also work depending on your adjusted gross income level. I didn't include that in here. I should have as a part of the discussion. But the book mentions the tuition and fee deduction as part of the discussion, which is something to think about. All right, let's move on to the credits. Next credits, dependent care credit. As I mentioned, that's used to help you cover the cost of daycare when you're either at school or at work. And the credit varies depending on your income. The higher your income, the less of the percentage you get. So it's 20 to 35%. The maximum amount allowed per child is $3,000, $6,000 in total. In terms of the eligible child or dependent has to be under the age of 13. It can qualify for disabled dependents or disabled spouse as long as it's daycare that you use while you're working or at school. Eligible expenses again, daycare, babysitter, and so forth. Tuition for private school does not count. So if there's like certain private school that does split the cost, have them give you a detailed bill of what's daycare and what's tuition. Tuition does not count. Summer school generally does not count. This credit is a non-refundable credit. This also works with the dependent care employer assistance. So you got to add that information as well. It works hand in hand with this one. Adoption credit, another credit that works with any employer-funded assistance. Again, you got to enter both information. For this one, is the adoption credit. It's claimed when the adoption becomes final, but you can aggregate the costs. The costs are added up until the year becomes final. So again, any costs incurred up to that date. The adoption has to be for a child under the age of 18. It's claim when it becomes final. The maximum amount of credit is 14,080, and that's indexed for inflation, of course. Expenses not allowed during that year due to the ceiling amounts carried forward. Remember, this is one of those credits that I like because you can carry it forward, up to 5 years. So it actually works in the favor for a lot of taxpayers. AGI limitations apply if your income is over a certain amount. It starts to phase out. Retirement savers credit. This credit started in Bush's administration. The incentive for this credit was to help or encourage low-income individuals to invest in retirement accounts. So that's what this is for. It's to meet low-income. There's different income thresholds. As long as you're under those threshold numbers, depending on your filing status, the form is actually the 8880. In case you're looking at the form, as long as it's under those percentages or under those threshold amounts, you'll get the credit. The eligible taxpayer must be at least 18 and cannot be claimed as a dependent, and also has to have earned income. By the way, maximum amount of the credit is $1,000. The credit is non-refundable. And here's where those income numbers, and it's based on percentages. Again, the lower your income, the more your percentage. The higher your income, the less your percentage. Now think about these numbers. So again, it's geared towards low-income individuals. So you're considered low income according to IRS and Congress if you're single and making under $32,000, had a household $48,000, and married filing jointly $64,000. That's the way these credits work. Anything over that, you don't get the credit. Foreign tax credit, as I mentioned, that's if you're paying taxes, income taxes on, let's say you have dividends from a foreign country and you're paying taxes here and you're also paying taxes in, let's say, Spain. You're able to claim a credit for those taxes paid. Now, I also mentioned that the foreign tax credit is also, or the foreign taxes can also be claimed as an itemized deduction. That's true. It can also be claimed either as an itemized deduction or as a foreign tax credit. But as I mentioned in the beginning of this discussion today, the foreign tax credit or credits itself are usually more advantageous than itemized deduction. But it can work either way, but not both. You can't claim both. Remember, no double benefit rule. The credit is non-refundable. The form is 1116 on this one. And general business credit 3800 or other forms as well. But as I mentioned regarding the general business credit, that's a combination or a collection of several business credits. And just to give you a partial list of these credits, the book gives you a very good explanation of each credit. And if you think of these credits, I do like some of these credits. Some of these credits are still in existence. Disabled access tax credits, work opportunity tax credits, research activity tax credit, low income housing tax credit, welfare to work tax credit, rehabilitation expenditure credit. Even several years ago, they even had like for prisoners or not prisoners. parolees, like I should say, parolees. If you hire parolees, you get a tax credit for that as well. That credit hasn't been there in a while, but it sort of serves a similar purpose. It's trying to give an incentive for the business if you meet a certain type of, if you're trying to fund a certain type or trying to hire specific individuals. If you're hiring disabled individuals, sometimes there's even veterans credit is even included in here, welfare to work credit and so forth. Again, this is a very good credit, often missed. Take a look at if your business clients qualify, because they may be able to qualify. Credit is not refundable. So if it's a business credit, if it goes through the S corporation, it would flow through to the individual. Unused credit may be carried back 1 year, then carried forward for up to. No, that's not right. Um, that's not it there anymore. That used to be there. Yeah, it is carried forward. You don't carry it back anymore. It is carried forward. Yes, so scratch that. All right. Earned income credit. That's the credit that's probably the most popular one. There is a lot of abuse in that credit. For the earned income tax credit, the taxpayer, well, there's different thresholds. It's geared towards taxpayer with low income. If you're a taxpayer with no dependents, you got to be over 24. Actually, pretty much any taxpayer qualifies as long as your income is low enough. But specifically, you got to be old enough. You got to be over 24. So think about how it coincides with the dependency rules. So again, under 24 and a full-time student, over 24 and under 25. So what if you're 24? You don't get earned income credit. That's kind of weird the way it works. Or at any age if you have a qualifying child. So if you're single with no dependents, you got to be between 24, over 24, so 25 and 65, and your income has to be less than 15,570. Again, you got to have earned income, by the way. You have to have earned income, by the way. Earned income, wages, self-employment income, and so forth. What if you're head of household? So you have to have one dependent, one or more dependents. Now, here's the income varies. As long as it's under 41,000 to 50,000, varies depending on the number of kids. Now, this one I'm not. The tables are there on in the book, but again, it's the more kids you have, the higher the income threshold you have. Just think of it that way. And it's up to 3 for the earned income credit. It used to be up to 2, now it's up to 3 qualifying dependents. I know somebody had asked me what's the maximum amount of kids that you can claim. Well, there is no max. The maximum amount of kids you can claim for earned income credit is 3. And that's the max in this case. The maximum amount of kids you can claim for the dependent care credit is 2. So again, it all depends on the credit. The maximum amount of credit that you can claim for the child tax credit, there isn't any. The maximum amount of dependents that you can claim for the credit for other dependents, there isn't any. Only certain credits have limits on dependents, and this is one of them. Again, it's up to 3. Married with no dependents, again, goes back to the single one. As long as it's under $15,000, then you get earned income credit. Doesn't matter as long as you're between 25 and 65. If you have kids, and you're married and you have one or two or one or three kids, then it depends on your income. Notice that this is very close to the head of household income, but they give more leeway for married filing jointly. So again, it varies depending on the number of kids you have. And these numbers are indexed for inflation. These numbers I gave you are 2019 numbers. 2020 should be close to these numbers. The other rule is you cannot have investment income, portfolio income in excess of 3,600. So that's another disqualifier. Again, you have to have earned income, and then your income has to be below those thresholds, and then you also have to have earned income, by the way. Again, there's a lot of fraud on this. Schedule EIC is the form that you got to fill out. If you're a tax return preparer, you got to fill out the due diligence checklist that also always has to be filled out. There's a lot of fraud going on with this one. Some people have even said to eliminate this credit, completely. It serves some purpose, but it does help out some taxpayers, low-income taxpayers. But some individuals make up income just so they can reach a particular threshold, and that's fraud. That's enough about the earned income tax credit that I want to talk about. Let's talk about other taxes. These taxes we've already talked about. The self-employment tax, on self-employment income, we talked about that. Early withdrawal penalty. If you take your retirement account early, you're penalized. What's that age? Anybody know the age? What's early? 59 and a half. 59 and a half. Wait, I got to give you a CARES update. See CARES Act. Why did I say that CARES Act? What did I mention here? Okay, I didn't put that in the lecture notes previously, but the CARES Act is providing individuals that are affected by the coronavirus to take their money without being subject to an early withdrawal penalty. It's still subject to ordinary income, by the way, but they don't got to pay the 10% early withdrawal penalty so long as they use it for coronavirus related purposes. And that's pretty much anybody. And by the way, the IRS is not going to ask you why you're taking the money. So long as you take the money out this year, everybody's affected by the coronavirus. So just put it that way. They're not going to ask you to I guess substantiate what you're using the money for. Again, everybody's affected by it. So the 10% penalty, it's waived just again for this year. Even though the law says for those affected by the coronavirus, again, the IRS is not going to ask you on that because everybody's affected by it. So that's actually a good thing. I've gotten a lot of questions about this, but the other part of it is people read this incorrectly when they said we don't have to pay any tax on our distributions for our 401k. Oh, you still got to pay tax. You just don't have to pay the penalty. You still got to pay income tax, not the penalty. This tax is waived. Nanny tax. If you have any employees that live in your household, you got to take out payroll taxes. That's what this tax is for. This is on Schedule H on the federal side, and that's included as part of your federal tax return. You got to give your nanny, not just nanny, but it's commonly referred to as a nanny. You got to give them a W-2. You got to file payroll tax returns, and then you got to do the Schedule H on for the federal side at least. And then unreported Social Security tax and Medicare taxes. So this question does come up to let's say if somebody that works in the food industry or hospitality industry that the compensation is by tips. Most of these individuals, again, bartenders, busboys, or waitresses, hostess, whoever, a lot of these individuals work by tips. Chances are that a lot of their tips are not reported on their W-2s. You have to ask these taxpayers, what are your unreported wages? What are your unreported tips? Those are tips are subject to Social Security taxes, subject to income taxes. You got to ask them that question. Chances are they probably won't tell you the total truth. They may tell you some of it, but you still got to ask. You got to ask those individuals, well, what are your total tips? That's subject to not self-employment tax. You still got to pay FICA taxes. Ask that question, get in the habit of asking the question. But remember, you're not the auditor. If they tell you they didn't receive any tips, all the tips are reported on the W-2. That can also be true. Take their word for it. You still got to ask. Number 5 is not really there anymore. Sort of there. Additional Medicare tax on high income. Those were the Obamacare tax credits that were used to fund Obamacare. Pretty much eliminated now. Alternative minimum tax is still there. The purpose of this tax is so people can use, they have a lot of deductions, will be, paying, so people don't overly abuse the system, I guess, in terms of alternative minimum tax. That's all that I have. Well, let me just talk about common AMT adjustments. So just so you can get an idea of common AMT adjustments for itemized deductions, and this has always been there. Medical expenses use a 10% AGI floor. Taxes are added back. Mortgage, home equity interest added back. And this is not all the adjustments, but just some of them. And miscellaneous expenses, 2%. add it back. So these are AMT adjustments. There were other adjustments as well. I'm not going to get through the other adjustments, but think about the main ones here. This one is gone, right? This one has been eliminated, right? As part of the Tax Cuts and Jobs Act. Home equity interest is no longer deductible, right? And taxes, well, let me, I guess, explain each one. Taxes, what do we know about taxes? It's capped at 10K, right? Per Tax Cuts and Jobs Act. Not deductible per Tax Cuts and Jobs Act. Okay, you guys see what's happening here? Deductible per Tax Cuts and Jobs Act. Hence, think about this for a second. Fewer adjustments will yield fewer taxpayers being subject to AMT. By the way, I'm oversimplifying it, but this is sort of true because of the adjustments as part of specifically on the adjustments on the itemized deductions. A lot of people that had high taxes or high miscellaneous expenses, those items were added back when you figure out alternative minimum tax, so you get back to square one. So in essence, AMT has been not totally eliminated, but effectively eliminated because if you think about it, these items are no longer there. So fewer adjustments, fewer people are being subject to AMT. AMT, they talked about eliminating it, but it hasn't been eliminated. The intent is so everybody pays their fair share of taxes. So it's sort of there. I'll give you a quick overview. Once you figure out the tentative minimum tax, so let's say tentative minimum tax was 6,000, and your regular income tax was 5,000. AMT is 1,000. You guys see how that works. So in essence, you're paying a total of $6,000 in taxes. Regular income tax is 5,000. Your alternative minimum tax is 1,000. You guys see that, right? But let's say the opposite happened. Let's say your regular income tax was 6,000, and once you go through the math, your AMT is 5,000. There's no AMT. I mean, your tentative minimum tax is 5,000. You're actually paying more than what you should according to AMT computation. So there's no AMT. You're just paying the right amount of taxes. AMT is the excess of tentative minimum tax over regular income tax. On the CPA exam, I do see them testing you on that portion of it, but not so much on the computation because I think that AMT is slowly going away. AMT has been eliminated for corporations, by the way, as part of the Tax Cuts and Jobs Act. Hasn't been eliminated for individuals. Just FYI, you can use that information as you see fit. But just so you know, AMT has been eliminated for C corporation. Hasn't been eliminated for individuals. But in a way, it's been effectively eliminated, but not completely repealed. That's all that I have for taxes and credits and other stuff. Any questions? No questions? Come on, people, ask me questions. I don't believe that you guys have no questions. This is going to be your last opportunity to ask me questions. Anybody? So because you're not asking me questions, you guys are all going to get A's, right? Right?
Hopefully.
I hope so. Again, this is where you need to ask me questions. Please do not ask me any questions tomorrow or Wednesday. I'm not going to answer. You need to ask me any questions, anything that you're still unsure of, anything that you want me to quickly go over, anything. Today's your last and final opportunity. Maybe it's something that's not related to tax, something else you want to talk about. No? There's something I do want to talk about. AICPA and the Illinois CPA Society has scholarships during the years. There's a couple scholarships. I know the AICPA has a new scholarship available for to cover some of the costs for the CPA exam. Look on the AICPA scholarships for CPA exam. Again, the Illinois CPA Society throughout the years, they have always had scholarships and different different internships as well. Always look into that. There's opportunities there. And if you're trying to, I really encourage and want you guys to get involved with the Illinois CPA Society. As a student, the membership is free. Again, you get an opportunity to network. You get to be involved with a lot of different individuals. Plus, you get information on any scholarships and any internships. Just something to think about. Go to Illinois CPA Society, icpas.org. Anything else you guys want to talk about? No? I'm going to see you guys next semester. Most of you, hopefully. Yeah, next semester in the fall. I don't know how it's going to be delivered. Um, it's going to be, to my knowledge, it may be under the same format. Again, I'm not sure how it's going to be delivered, but it may be under the same format. Uh, if I were to guess, it may be under the same format. So I think it kind of works. It's just a bit different, but this is what we have to do until in the remaining part of the semester. All right. So the reason why I'm going back to this screen, if you're taking the corporate and entity tax class, yeah, this is going to be the book. I think that class meets on Monday. Um, well, this is the book. It should be the 2021 edition, so the 44th edition. I gotta update my. It's too slow. There it is. That's the book. Corporations, partnerships, and trusts. Look at the. Here it is. Where? No. Do I even have it here? Here it is. So it's the 2021 edition. Again, same thing. The first couple of chapters are the same as this class, but this is what it's going to look like. Same author, same textbook. For intermediate accounting, the textbook we're using is this one. It's the Intermediate Accounting 17th edition. Do not get the 16th edition. The 16th edition is not, quite a few things have changed. So get this edition. So it's the Kiesel, Wegnat, and who's the other guy? Who's the other guy? I forget. But this is, oh, it went straight to this chapter. Okay, so this is a textbook. And what other class? Auditing. Auditing, I submitted my, with the book that I want to use. Again, if you take my auditing class, there's a couple books that, there was another book that came out. This is the book, if you see on the one that I'm going to use. Send me an email, I'll give you the ISBN, but this is the book that I want to use for that class. It's the new, it's a different book than the one they were using before. But this is it. It's again, this is what it's going to look like. I like this book better because it's easier to read. Auditing is still auditing, and some people don't like auditing. It's not that interesting. This makes it a bit easier to read. It's more user friendly. I think I like the question format in this book. Um, Again, some books just go straight to the auditing standards, a bit dry. But that's the book we're going to use for auditing. That's it, right? Those are
I
the
have a
three classes.
question.
Hold on. And then if you're taking, go ahead with your question. Go ahead.
I know for auditing, it's business 206. It has a
Right.
prerequisite of 205, which is the intermediate accounting.
Okay.
Is that really necessary to have that prerequisite? Because it does say or permission or agreement of the I don't know if it
It,
says
it,
instructor or department head.
well, if you're going to take 205 at the same time, that's fine. Um, if you took 181, it's fine. The thing is, it overlaps. It helps. It definitely helps if you took your intermediate accounting. But think about intermediate accounting. Intermediate accounting is it's just an extended version of your 181 and 182 class. If you think about it, again, 181 your financial accounting, or if you took this class, 180 your college accounting. Then you probably took 181 financial accounting. Then you took 182. You should be pretty comfortable right now to do 206. So it may get stopped if you try to register online because you don't have the class. It may not let you register.
That's what happened. It did not let me register.
Okay, send Professor Bridget Mahan an email. And that goes for anybody. Again, as long I'll approve it. She's gonna ask me anyway. I'll approve it. She'll approve it. And she'll say the same thing. As long as you're taking intermediate accounting or plan to in the near future, she'll approve it. And tell her I said I'm okay with that. And again, Professor Mahan, Bridget Mahan, she's the chair of the department. Send her an email and she'll get it approved. And yeah, but I would encourage you to take also 205 if you can take it at the same time.
That's what I want to do, take it at the same time. But again, as I said, it did not let me register. Now she's the
She's the business chair. It has to
Harold Washington.
at
Right?
Harold Washington College. She has to approve it. Or even if you talk to the registrar, if they contact me, I'll say yes because I'm the teacher. I'll be the instructor.
Yeah, I've talked to her before to get into this class because I also didn't get my prerequisites here. And I just sent an email to Bridget and she called me really soon and they got me registered really quickly. So it's pretty easy if you just email her.
Does it
Yeah,
matter that I'm that I'm a student at actually Wright College?
No, it shouldn't. It shouldn't. Yeah, just contact her, and yeah, she's pretty quick on responding to emails, and she'll approve it right away. Yeah, that's not going to be a problem. You're part of the city colleges. You're a student. I don't think there'll be a problem with getting your transcript or getting information from. Anyways,
No, it's all in the system because it wouldn't let me register, but it let me register for the other classes. I was just wondering if I had to go to the head of the business department at Wright.
No. Who is the head? Is it still Paul?
I think it is Paul Croitoro.
Yeah, tell him I said hi. I've been there a couple of semesters.
He knows you. I told him because he's my instructor for another class.
I hope he said nice things about me.
No, he's
No, we go back. We worked. When's the last time I seen him? I seen him at the Illinois Board of Examiners had a education seminar a couple years ago. That was the last time I seen him. It was just interesting. I haven't seen him in years, and just out of the blue, he was there. I saw a lot of people there, just as it goes. But yeah, that's good. Just tell him I said hi. You don't need approval through him. Again, since it's part of Harold Washington class, just talk to Professor Mahan. She'll get the approval. Why am I showing you this book? Oh, well, this is for 180. Why am I showing you this book? Oh, I worked on this book. That's why. Let's see. You guys see my name? You guys see my name?
oh yeah.
You guys see it? Okay, just.
Now, if someone already took a 181 and 182, is
you
is
can buy this.
180
You don't need it. This is just yeah. If you took 181, you don't need 180. This is um.
yeah,
This is a good book actually.
that's
This is
what
a very
Professor Cortoro said.
yeah. You don't need it. It's I guess 180 is geared towards people that aren't really sure what they want to do, and sometimes that's counted for your 181 as well, depending on the circumstances. If you're not sure what you want to do, then it could work. Um, but yeah, if you got 181, you got 182 or the equivalent, you should be okay. Again, I hope to see everybody next semester. Good luck on the final. Any questions, class? Anybody? Anything? Anything you guys want to ask me? Nothing? You guys want to see my cannabis presentation? No, I'm kidding. I haven't even finished it. I'm working on presentations outside of here too, from the Illinois CPA Society. So Illinois CPA Society, we're doing our maybe since we're talking about this, one of the things that we do every year, we have a summit uh convention, I guess. And this year everything is virtual. So this is going to be very interesting. So this is going to be virtual. Here it is. Virtual summit. I don't know what type of benefits you'll get as a student, um, but it's good to network. Here's Todd. Uh, Funny, he called me over on Friday. Like, I don't know why he called. Well, I know why he called me. I'll tell you more. I don't want to tell you why he called me. It's like I do want to tell you, but I don't want to tell you. Todd is the president, by the way. I won't tell you. It may happen, may not happen. All right. So pre-summit workshops. I'll be doing one of the seminars in the pre-summit workshops. Ethics. We'll be talking about ethics. Um, Sort of talked about ethics in this class. We'll talk more about ethics in the auditing class, the overlap. Ethics is a common theme. We'll talk about ethics even to some extent in intermediate accounting. We briefly talked about it in this class. We'll talk about it in a bit more detail in auditing class, especially the code of professional conduct. And that's something that we're going to get into detail in that class. The code of professional conduct is not just for audits. Even though some CPAs or even some accountants believe that that's just for audits, no, the code of professional conduct applies to all services. There's some standards that specifically only apply to auditing, but not everything. Code of professional conduct, again, you gotta have the right amount of knowledge, and you can't provide an opinion on a financial statement unless it's GAAP. Those type of standards. Again, some of it applies to everything, some of it applies to just in auditing. But a lot of workshops here, learning tracks. So I do this lately. I've been attending. I still attend the seminars as well, the other seminars, and it's like this year I'm doing it both days. Usually I just do one day. Well, I do the day that I'm presenting plus the next day, and then the third day I do my own thing. So this year, look at all these classes that they have.
Are there any free ones?
I don't think so. Well, no, I don't think there are any. Not these classes because these are part of the conference. But I felt like a student, like I was picking my classes. I'm like, what classes should I take? What classes should I? And I was like, it felt weird. Yeah, but these are not. These are yeah, you got to pay for these. There are some that are free. Again, go through the Illinois CPA Society. There are some that are from time to time that are free. Um, but if you're looking for free continuing education, again, Illinois CPA Society on occasion offers some. CPA Academy has free CPE, but those CPE are usually like an hour, or two. Again, that's I've used their CPE courses from time to time. Um, again, just basic training, and this is just different, on different topics. Just so you can get an idea, some of the topics that they have. They're pretty straightforward. Um, and if you're looking for free courses, this is a popular one, CPA Academy. Again, Illinois CPA Society does offer some, but most of them are, again, that's it's a professional organization, and a lot of their funding is through continuing education for CPAs. Uh, but I wonder if it's discounted because of if you're a student member. That I don't know. You may want to look into that. If you're a student, see if it's discounted because of a student member. Look into that. Anything else you guys want to talk about? Anything?
Can I ask another question?
Sure.
So,
Oh, wait,
in
wait,
ter-
wait. Before you ask me that question, hold that question for a second. One thing we haven't talked about yet is the research assignment. Um, okay, so
oh,
research assignment, I'm just going to throw out code sections that I was looking for. Section 61, because it's a gross income issue. Even if you didn't identify Section 61, but it was mostly a gross income issue. Remember, I asked if it's either deductible or if it's income. This was a gross income issue. Section 280A, specifically G, right? Subsection G that talks about that again. If it's 14 days or less, not considered income, right? That's the specific one of the specific code sections I wanted you guys to cite. Awards, prizes and awards, section 74. And that's another section that I wanted you to cite. And the other section, 109, that deals with leasehold improvements. Those were the three main sections that I wanted you to at least cover. But again, section 61 as well. Again, other subsections within those sections would also work. Anybody cited any other sections, any other relevant, authority other than that?
There was a subsection of 74 where they specifically talked about radio and TV shows.
Okay, okay, that's
I
fine.
don't
Again,
I don't have my I don't remember exactly what it was.
that's
And
good. Again, it's all under 74. You good that you cited a specific section. That's great. That's what I was looking for.
now I didn't cite it, um but the IRS sent someone like a information letter, so that would not be a primary source.
No, oh well, if it's a private letter ruling, I guess
No,
you
not a
could.
ruling, just it was a letter to a congresswoman or a senator.
Oh
who
yeah, then yeah,
They
that's not
just asked a
primary
question
source.
on behalf of someone in their district. So even in that letter they said because it was taxpayer, they could not provide private information. So it was just general citing of some sections. They didn't really say anything. They didn't even hint which way they would rule if this came up. So I didn't cite that.
Well, it's good that you did research on that, but yeah, that's remember I said you can use secondary resources to go get to your answer, and hopefully you found a way around it to get to the code, which is section 74, which is the one I was looking for.
Oh, but I did call Cengage. They referred me to the bookstore, the college bookstore, and they said because I have the 2021 edition, the code should have come from the instructor. Whereas if someone has the 2020 book, then that came with the card. That's what they told me, and they are still looking into it.
Oh my, this is the first I heard of that. So, well, you know what? I'm glad that I know now. Wow, that
They
does,
don't
yeah,
even know. They don't know what's going. They don't know.
well, I guess it sort of made sense because you said according to your book, it didn't, it had the card, but it was blank.
No,
I
it
guess
has
that,
the printed about the checkpoint, but
but
where it doesn't have the access code and the password. It just says for student, see your instructor for the
can you do me,
codes.
yeah, can you do me a favor? Can you scan that card and send it to me? And unfortunately, there's nothing we can do for this class, but going forward, this is a sudden change I was unaware of. I want to see how I can work with Cengage to so this problem won't happen again. So
Oh,
send me
no,
what you.
the code would have come from the bookstore because Cengage told me since I did not buy the book from them, they could not provide me with the code. So this is from it's called the MBS Direct bookstore that now they're using. The college is using.
Okay, right, right. Um, yeah, send me that email and also send me the scan of and I'll see what I can do, going forward. But unfortunately, there's not much we can do in this semester. You already submitted your project, right?
Oh
Yes.
yes, I used the Cornell Law School, which was fine. Uh, that worked out well.
Yeah. Okay. Yeah, as long as you did the research, that's what I was looking for. Anybody have any other comment on the research assignment? Any code sections, any other authority or anything? Well, I guess 121 will work because it's as it relates to. I wasn't exactly looking for it, but yeah, that works because again, it relates to the sale of a personal residence. More specific questions on, yeah, how does that affect the basis, right? So that's okay. 121, and also another section, 11 or 1001 that talks about basis. So that'll work too. But again, I was mostly focusing on the other side of it. But yeah, 121 works too. Any other sources? Anything else that I missed? That was it for the that I can think of. I think that was it. Yeah, like, I can't think of any other sections off the top of my head. Again, I was looking for sources, how you supported your answer. There's, no right or wrong answer. It's just how you supported it. Just look at it that way. You did a good research. You supported your answer. You followed the format. You'll get good points for that. All right. I think somebody had a question. Margaret, I think
Yeah,
was that
I
you?
did. This is going back to 204 or 205, and it's in conjunction with 20. I don't know what is which. 204 and 205 go together.
Right.
So what is in one class and what is covered in the other?
Oh, 205 is a lecture. 204. Wait. Yeah, 20. It's kind of weird the way they did the numbering system. So here's the thing, and this is going for 205. You should take 204. You're not required to take 204, but you should take 204. 204 is the research, and that's an issue. Like we don't have any lab, but you will have access to what's called the FASB codification. I'll give you access to that once we renew the subscription. You're doing research assignments. It's similar to what we did in this class, but it's a FASB code, so to speak, and I'll guide you through doing that. You're also doing the same code assignments, research assignments in the lecture class. At least I give you assignments, so you're still doing research. You don't take 204. It's not a required class. But what they will tell you is this: they will tell you that it's counted as a research hour. But if you're already if you're going to submit your application to take the CPA exam, you're not required to have research hour anymore. Before, a couple years ago, you were required to have at least one research hour in your total accounting hours. Now it's not required. You could still have research, but that's accounting, but not as a separate requirement. So it's not needed. It's not needed. But you could use it just for practice. It's another more assignments on research. Just look at it that way. It's a lab class. So if we were doing it in lab, we would meet like every other week to the lab, and so you're able to use the lab to use the computer.
And you have to write papers. I mean,
Yeah,
how?
it's six for 204 is six research assignments. But again, keep in mind that there's also research assignments in the class itself. There's research assignments in 205, but then there's separate research assignments in 204. It's up to you how much research you want to get practice with. Again, I don't think you need it unless you really want to get in practice into the FASB codification. Then take 204. It won't hurt, but it's not required. That's what I can tell you. It's not required for the CPA exam. It won't hurt. It's really up to you. If you need more practice, if you feel that you need more practice on doing research, keep in mind that the CPA exam, for those of you who are aspiring to be CPAs, the CPA exam does have simulations. Simulations will require you to be familiar with the code. So having some exposure to the code, doing research will benefit you. So it doesn't hurt. So just put it that way. But it's not something that can it's not a requirement for the CPA exam, not anymore.
I'm just trying to gauge how much writing, how much each research, how many pages. What's going to be the requirement?
Well, for the research assignments in that class, it's not a matter of pages. It's more like citing the right code section. That's all I'm looking for. It doesn't follow the same format as in this class where you got to do a 5-page memo for each research assignment. 1-page memo would work as long as you cite the code section, the
Mhm.
specific code section that answers the question. So just look at it that way. The research assignments are shorter because the
Okay.
whole goal for it's a bit different, and I guess in that class, the goal for that class is more to get you more practice and so you can become more familiar with the FASB codification. That's the whole goal for that class. But not just that. Then the other part of that class, on the lab class, at least the way I do it, 6 research assignments and then 1 comprehensive assignment. The comprehensive assignment, it's like you're doing financials from scratch. Journal entries, go from adjusted trial balance, adjusted journal entries, adjusted trial balance, unadjusted trial balance, adjusted journal entries, and so forth. Financial statements, closing entries. It goes through the whole cycle. So it does help you. It does help with more practice. So I can't say don't take it, but I can't really make a recommendation one way or the other. I guess. I guess, and I shouldn't say this, and I probably shouldn't be on tape saying this. Take it if you want. Take it if you feel that it would help you. with the
No,
research.
I'm
That's the best
asking
that I can
because
tell
for
you.
some reason I thought I thought one of them would be like using an accounting software like QuickBooks or something
Oh
like
no, that's a different class. The class that you're looking for is it's a QuickBooks class. It's specifically titled what's it? It's called it's the class is QuickBooks in the name. What's the name of the class?
is it 250?
Could be. Yeah, it could be. But it has QuickBooks in the title of the course. That one's specific to QuickBooks. If you're trying to get familiar with QuickBooks, take that class. For this class, it's not QuickBooks related. It's more research based. So if that's what you're trying to find out, hopefully that helps.
Okay, I didn't see anything with QuickBooks, but I'm used to a different accounting software, so that's why I would need some. I was looking for some practice with QuickBooks.
Yeah, see if not, always get a tech. There's always a lot of books online. Always get like a QuickBooks for Dummy book. There's a lot of books you can get online. Um, what can I think of? I don't know the name of the course, but 250 does sound familiar. It does sound familiar. That's the best that I can tell you.
Did anyone in the class take it?
Did anybody take the QuickBooks class? Anybody here? Anybody?
I think everyone left. Because I have experience with an older version of Sage, which was a
Oh,
really robust accounting software for manufacturing.
yeah, I'm familiar with Sage. Yeah, my small business clients, my bigger clients use whatever different Sage is one. I even have a couple of service companies that use something with an A. Can't think of it off the top of my head right now, but it's this software has a time management tool attached to it, but it's also an accounting software. It's a GL software, but it has time management. What the heck is that software? It starts with an A. I can't even think of it. I haven't been there in a month. But there's a lot of software packages out there. But just remember, debits and credits. Everything is all based on debits and credits. QuickBooks is very you don't really need to take a class for QuickBooks. So again, as long as you become familiar with it, you don't need to take a class. If you're using, if you're using other, software, QuickBooks should be easy for you. Just
Okay.
I guess let me just put it that way because it doesn't require you to do it does help doing journal entries, but it's not necessarily requirement to do journal entry. Actually, it's the that part of QuickBooks is something the part that I like and the part that I hate that you're not required to do journal entries. Which again you are required to adjust the books from an accounting standpoint. I do journal entries, but from a user input they're not required to do journal entries. So from that perspective I get it, it's user friendly. As long as you enter the transactions in the register and the check register, you'll be, as long as everything
It
is
updates.
it updates,
It's
it does.
automatically. That's the I'm. This is an old system, Mass 90, and no one actually has heard of it. But it was bought out or became Sage.
Yeah,
That's the one I know.
yeah, again, I'm familiar with it. I just, again, QuickBooks is the most common one, but you'll be fine if you use that, you should be comfortable with QuickBooks. You may just, you'll pick it up. I'm pretty sure you'll pick it up, and it's very user friendly. Like again, if my clients that have very limited accounting experience, if they pick it up, and very quickly, you'll have no problem with it. I'm more than confident. But again, the research assignment as far as the 204, that's research. If you want to get more practice research, it'll help you. If you want any more practice with QuickBooks, there's a separate class for that. I think it is 250. Look into that. That class is not offered every semester, so see when it's offered. Again, that's the best I can tell you with that. That one is actually very good because you do problems. It walks you through everything. But for somebody like you that already has experience in some accounting, then you'll pick it up fast. Like that would be, I would recommend taking the QuickBooks class for somebody that has never really had any hands-on accounting experience at any level. Now, if you did data entry, accounts payable, accounts receivable, that's accounting experience. That counts. You'll pick it up right away. But if you have no experience in accounting, bookkeeping, or anything, then you should definitely take a QuickBooks class, so that way you're able to at least see that side of it. We can go over the theory, but the other side of it is getting the data entry and getting the reports and so forth. Yes, yes, yeah. There's a lot of classes, out there as well. That free CPA Academy that has a lot of classes on even QuickBooks. Look into that as well. Again, there's a lot of resources out there, books you can get.
I will definitely look into it.
Okay, good. Any other questions on the material? Anything else? Class related? Not class related? Baseball? I heard baseball started, sort of. I heard there was a baseball game, a couple of baseball games yesterday. The Cubs lost. Sox won, right? That's like the only thing I
cares?
know. Are you a Cubs fan? Is that why you're upset?
Yes. Well, it's only preseason. It doesn't matter. Plus, this
that's what
season's going to
from
be
Cubs fans.
meaningless.
That's what I hear about Cubs fans. I really didn't know that there was a game until today. So I was teasing my friends, my Cubs friends. Was there a game last night? They refused to answer that question. They're like, no. I'm like, what are you talking about? There was a game. It doesn't count. But if it was the other way around, if they would have won, it would have been different. It's just funny how the South side, North side, how the rivalry is over here. It's very interesting. It's sports. I support both teams. As long as they make it to the playoffs, it's just going to be interesting this year. It's spring season right now. So what are they going to have a couple games and then the actual season starts this weekend? Is that correct?
I think the 27th is the first game that actually starts counting.
Yeah, so that gives them, I guess, some practice, and then on the weekend, right? Oh no, next week, right? I don't know.
I think a week from today, maybe. I could be wrong though.
Yeah, so it's gonna be soon. I guess I'm used to watching sports. It's just gonna be different now. But yeah, that's on the news stuff to look for. Don't forget, there's an election coming up. Pay attention to the election, not just the presidential election. I'm not, minimizing that. It's an important election, but also, as we talked about in this class, the legislative process is very important, not just for tax bills. It's very important on who the legislators are, who the House of Representatives consist of, who the senators consist of. And yeah, and again, I'm not saying that it's not important for the president. That's also important, but also, the other offices. And as I mentioned to local offices as well, get involved with local offices too. Make sure you exercise your right to vote. If I don't see you next semester. Otherwise, again, I want to say good luck to everybody. Study. You got till Wednesday to take the final. Hopefully, I see you guys next semester. If not, good luck in your endeavors. Can I get a motion to adjourn in a second?
Wait, quickly. There are two final exam listed on the Brightspace. Which one is
What?
which one?
Oh no, that's wrong. I'll double check right now. That should be where. I'll check right now.
I-
Oh,
I
I'll
thought
fix that. Don't do that yet. There should be only one. There's one. I gotta look into that.
right, because yeah, there are two links to it.
Yeah, that could be it. You know what? Let me view it as a student real quick. I think you're right about that. Hold on. Okay, this is the same. No, this is not the course I want to see. That's a good question. Go to the course. You're gonna see this is similar to what you're gonna see. So on the calendar. So these are the two links that you see, right?
Yeah, one says 8:30, the other 9 p.m. I've
Yeah,
never seen that before. That's why I
you gotta fix that. It's just it has two different dates, but it should be the same. But even then, it's the same. You'll still see it as two separate links, But the date should be the same. I guess I can give you till 9. Yeah, it doesn't matter. I'll give you till 9, but it should be the same time. I don't know why I did that. I'll correct that. Nonetheless, it's the same thing. You click on the link, it'll take you to the same page.
Okay.
Again, remember, you use your time. That you're allotted 3 hours. So again, I'll give you till 9 o'clock. So I guess you have until 6 o'clock to get started. Look at it that way. Again, you don't have to use the 3 hours, but you have the full 3 hours to complete it. Again, you create your own spreadsheets. Do not use my spreadsheets. I want to see originality on your spreadsheets. Again, you can use my spreadsheets as a guide when you're preparing, but I want to see original spreadsheets. And again, I gave you already an idea what's going to be on the exam. Then
But
you
how
give-
would the headings differ? I mean, how could we make it original? Different font? I don't
just
know.
well, you see what I did. You see what I did today? Did I look back at my old spreadsheets? No, right? What did I do today when I was creating those spreadsheets? I went to Excel, opened up a new spreadsheet, started it from scratch. That's what I want to see you guys. You're going to use the same formulas. Don't get me wrong. It's going to be the same formulas. But I know what my spreadsheets look like, the spreadsheet that I've used in class. I don't want you to, oh, this is a like-kind exchange problem. Let me open up this spreadsheet and then put in the numbers that way. That's the lazy way. I want to see you starting it from scratch the way I did it today. Yeah, it may take you a bit more time, but at least it forces you to memorize those equations. That's what I want to see. Again, starting the spreadsheets from scratch. That's it's going to be the same equations anyway. I get what you're saying. It's going to be the same equations, but I just want to see you, doing it from scratch. That's what I want to see. Okay. Any other questions before we leave? No questions? Okay, again, I'll make that adjustment on the exam so it can have the same date. Otherwise, I need a motion to adjourn.
Motion
to adjourn.
Second. All right, guys. Good luck. I'll see you guys hopefully next